Good afternoon. Welcome to BizTech's Asian Midday Market Watch on Friday, March the 8th, 2024. I'm Jeffery, Halley, and along with my co-host Samantha Voon, we are joined by Kelvin Wong from OANDA in Singapore. Kelvin, happy Friday and welcome to the show.
As well as Samantha.
As usual, before we get to Kelvin's thoughts, we'll take a look around the Asian markets today and see what's been happening. Sea of green, it looks like a very positive end to the week. We can see the Nikkei 225 is 0.47% higher. Shanghai has climbed by 0.09%. That's a quiet day, but the Hang Seng in Hong Kong has risen by 1.1%. And down in Australia, the ASX 200 is up by 1.02% as well, with South Korea's Kospi up 0.98%. In Singapore, the STI is up 0.62%, and in Kuala Lumpur, the KLCI is up 0.08%. Kelvin, pretty positive finish to the end of the week. What are your thoughts on today's market movements?
Yeah, sure. So if you look at in general, from an intraday perspective, yes, we are kind of pretty much positive from a risk-on behavior. So we do reckon over here it has been kind of reinforced from the Federal Reserve Fed Chair Powell 2-day semi-annual testimony to Congress. So more or less, he didn't actually change a big picture in terms of how the Fed view things in terms of the inflationary trend. So pretty much within market expectation, keeping much the Fed a dovish pivot much alive. So I believe that the next big question the market will ask will be after that potential first interest rate cut in June that's been penciled in by the interest rate futures, how will be the pace of the interest rate cut will be. So I think that pretty much market will be much more focused on the next upcoming FOMC meeting. So that will be in the this month instead, March 20th, and that will also coincide with the release of their latest dot plot.
So, Kelvin, currency market also seems to be awakening from their slumber as at the end of the week approaches. What are your radar in the FX space?
All right, sure. So for sure, if you look at pretty much significant dollar strength weakening movement on the FX market. So in terms of an intermarket perspective, for sure, we start to see the 10-year US Treasury yield weakening below the 1.14% key support level. So that is the 200-day moving average, a breakdown below it. 2 days ago kind of reinforced this dollar weakness story back to the FX market. One particular pair I'm looking at will be the yen. So if you look at the yen strength, it seems to be coming back into the picture where the dollar yen starts to weaken to a level at 147 yesterday. So that's the weakest level seen almost in 4 weeks. So one of the kind of a reinforced triggered events that actually kind of a weakening this dollar against the yen has been these ongoing talks in the Japanese, we call it market participants, that this coming month, which is the 19th of March, 1 day ahead of the FOMC meeting where BOJ will meet, there's an increased chance that Bank of Japan on March. So market has been looking at either in March or April because right now there's some chatter around the Japanese market space is that this ongoing, we call it annual wage negotiation where BOJ governor is paying very much close attention to. There's some talks that various labor unions managed to gain a better package for their workers so that actually increases the chance of that bigger Japanese, they call it the Ringo, results that's going to be out on 15th of March, 4 days ahead of BOJ meeting, more or less kind of increase the odds of this potential interest rate removal, the short-term negative interest rate removal by BOJ in 19th of March instead of April. So that actually kind of increased the speculation of that yen strength, coming back into the FX market.
So let's finish up with the US Non-Farm Payroll numbers themselves. What are the possible market reactions we could see?
Yeah, so maybe let us talk about number one, how the market react ahead of the release of the non-farm payroll data first. So what we could see in the last 2 days, we see for sure significant dollar sell-off, especially against the Japanese yen. Then what we could, but what's interesting over here, that came ahead of the US non-farm payroll data release. So if you look at today's number on the consensus that's being pegged at the non-farm payroll data for the month of February, it's a very soft number. So quite surprisingly over here, after two strong data releases for the month of December and January, especially last month where market added in close to, I would say the exact number is 353k number of jobs added for February. So that's a very surprising strong number. So market this time around is actually lowering down significantly to only 200k jobs added. So that is almost in line with the trend of growth somewhere around last year between July to September figure on the average. So these 200k numbers, which is very on the soft side to me, but if markets could actually surprise on the upside, that means the real figures of the actual figure of the non-farm payroll data for February start to surprise on the upside, that could come in pretty much easily. So any numbers that's coming in the range of 300k or above, that could draw up a bit of dollar strength kind of rebound, or kind of a mean reversion rebound could actually fall in place for the dollar strength story to come back, at least a minor rebound after what we see that steep sell-off in the last 2 days.
Fantastic. Kelvin, thanks very much for joining us today. As ever, very incisive thoughts.
My pleasure.
We've been speaking to Kelvin Wong, Senior Market Analyst at OANDA in Singapore. I'm Jeffery Halley.
Samantha Voon.
And this has been BizTech's Asian Midday Market Watch. You can see this video and podcast on our website, www.biztech.asia, as well as our social media platforms. You can also see it with our syndication partners on their TV and radio stations and websites. Thanks so much for tuning in today.